What is up guys, my name is Ignas, welcome back to the channel. This week I've compared the dividends between three asset management names, and Rowe Price, ticker symbol TROW, had the most best metrics in that comparison. So today I want to specifically take a deeper look into this name. On the year to date, the stock is now down for 45.30%. In 1 year it is even worse, minus 45.66%. But they did show some promise in 5 years, where the stock went from $73 back in 2017, higher for 45.1%, to $106.20 per share. Interestingly enough, that we are already under the pre-pandemic highs, with the stock now being lower 22.6% from there. Company's market cap is at $24 billion, with the stock moving lower. Price to earnings is under 10 at 8.6 to 1, and this year's sell-off is making the dividend yield go up, which is now quite up there at 4.51%. So for today's analysis on TROW, first we'll take a look into financials and fundamental ratios, then at what levels analysts think the stock will be trading next year, what are superinvestors and insiders doing with their holdings, and lastly we'll take a look into the technicals of the price chart. I do believe this will be an interesting stock to look into, so let's start. So the first metric I want to take a look into is revenue, and here we have the history of the last 5 years. Back in 2017 they were bringing in $4.4 billion on the trailing 12 months. Then in a year in 2018 that was increased to over $5 billion. In 2019 we saw it at almost $5.4 billion, 2020 $5.75 billion. It was accelerating up in 2021 with $6.57 billion on the trailing 12 months, and then with the last quarter in, we now have it at $7.7 billion. So the largest increase was in June of 2021, where they brought in $1.9 billion for the quarter, a 36.33% year-over-year quarterly increase, and the worst one being back in 2019, where they brought in $1.3 billion, a decrease year-over-year for 0.08%. So that was the only quarter in the last 5 years that they did see a decrease year-over-year. But other than that, revenues have been steadily increasing for over 10% every quarter. Maybe the only issue that I can find is that in the last few quarters growth is slowing down, and first quarter of this year saw only a 2% increase year over year, so it may actually happen that next quarter will be going lower year over year. We'll need to see how that plays out. Now second metric I want to take a look into is price to earnings. So this is again history of the last 5 years. Back in 2017, price to earnings was at 11.37. Then in a year in 2018, as the price went up, price to earnings got a bit higher to 15.24. With 2019, as the price went sideways, but earnings per share increased, price to earnings went back down to 11.86. And as we see, the price kept on going horizontally to 2020, with price to earnings remaining close to 11 at 11.26. But in 2021, we saw both earnings going up and the stock price surging higher, so price to earnings went up to 13.89. That did remain through the whole of 2021, but with this year's sell-off, price to earnings went under 10 and then under 9, so we have it at 8.9 to 1. So highest price to earning was back in 2018, where the share price was at just over $100, so price to earnings at 15.80. And after that we did have a few dips where the PE was close to 11, but it's nowhere near what we have right now, with the PE ratio reaching a new bottom of 8.9 to 1. Now let's take the number of shares outstanding, and this chart again looks quite decent. So back in 2017 there were 246 million shares outstanding, then in 2018 it got increased a bit to 250 million, but in 2019 the downtrend continued, minus 4% for the quarter year over year, to exactly 240 million shares. In 2020 a decrease of 3 million shares to 237, and then another large decrease in 2021, minus 3% year over year to 230 million shares. And after that record in the share price, in 2022 we still remain at those 230 million shares. So it seems that they have been consistently buying back shares, with the exception of 2021, exactly when the price surged to those all-time highs. So it's good to see that they did actually miss buying those tops. Now next metric we'll be taking a look into is the dividend. So back in 2017, they were paying $1.93 per share with a dividend yield of 2.64%. Then in a year in 2018, the payout was increased to $2.35, so the dividend yield was just a bit lower at 2.42%. In 2019, payout at $2.69 with dividend yield at 2.5%. In 2020, the dividend payout was increased to $3.21, so the dividend yield was at 2.69%. But then there is this interesting thing in 2021, where the dividend payout was almost doubled at $6.66, so even with the price surging higher, the dividend yield jumped to 3.52%, and as the payout was still way up in 2022, at $7.24 per share, we had the yield spiking at 5.35%. Now recently the payout is a bit lower, but the dividend yield still remains up there, now at 4.18%. So for the majority of the last 5 years, we saw the dividend yield between 2 and 3%, but with the dividend payout continuously going higher and the price going lower recently, it's no surprise that the dividend yield is now over 4% at 4.18. Now to check on the dividend yield further, we will use my dividend investing watchlist. So we are in my watchlist and this is the tab for Rowe Price. We have that same dividend yield history of the last 5 years, and we calculate that on average in 5 years the dividend yield was at 2.97%. So in 2017 at a dividend yield of 2.22%, it was under the 5-year average for 25.28%. Then the worst time was in 2018, where the dividends was at 2.04%, below average for 31.34%. 2019 was a bit better at 2.44%, but still under average for 17.87%. 2020 was really close to average at 2.93%, 1.38% below. And then the yield only actually moved over average in 2021, so at a percentage of 3.52, it was over average for 18.48%, and then that best one was in 2022 at 5.35%, over the 5-year average for 80.08%. But even with the dividend yield now a bit lower, at 4.56%, we still have it way higher than that 5-year average, now over it for 53.49%. So way higher than it has mostly been in the last 5 years. Now if you would be interested in doing a similar analysis for yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise feel free adding tickers in a comment below, and I'll consider adding those into the watchlist myself. Maybe there are interesting opportunities out there that I'm still missing. So we've looked into the history, but how about expectations? Where the analysts think the stock will be trading next year? Here we have information on price targets from 9 analysts. Those targets range from the lows of $118 to the highs of $156 per share. The average out of those is $135.33, and currently Rowe Price is trading at $105.20. This means that on average, analysts predict that next year the stock will be trading higher for 28.6%. Now let's take another angle. Here we have earnings estimates from 10 analysts for next year, and they predict that on average, Rowe Price will be bringing $10.81 per share. If we assume that in 2023 price to earnings remains the same, then out of this increase in earnings, we are looking to an increase in price of 5.5%. So analysts are quite bullish on the stock, estimating that next year the price should be going up from 5 to 30%. Now next step are Superinvestors. So currently 5 funds are holding TROW, and 2 of them have added recently. TROW fund increased their position by almost 50% and are now holding over 86,000 shares, valued at over $13 million. And that makes quite a decent position of their portfolio at 3.73%. It seems that this is a new position for Hillman Value Fund, where they started it with 50,000 shares, valued at over $7.5 million, and that is another decent position of 3.21%. And then we have 3 funds holding, the largest being Market Asset Management, where they have 314,000 shares, valued at almost $47.5 million, but making a small position of 0.56% of their portfolio. So it seems that so far Superinvestors are quite bullish. They are holding or increasing on their positions. But how about insiders? This part is not that promising. In the last 6 months they did 0 buying transactions, but they did sell 8 times, totaling at $4.44 million. So it seems that insiders recently have only been selling. Now the last part we'll check is the price chart. The stock reached the highs of $223 per share back in November of 2021, and after that it just kept on going lower. In December it reached the 200-day moving average, which was a bit of a support. Then in the last days of the same month it already was a resistance. January 12th of 2022 we reached the 300-day moving average and quickly did stumble way under. There was a movement by the end of March where the price went closer to the 50-day moving average and crossed over for a week, but then in April it again went under. By the 20th the moving average acted as a resistance and the price again went lower from there. Now last week the 12-day moving average of the MACD crossed the 26th one to the lower side and relative strength index was going lower, reaching 30 this week on the 13th, and that remains like that to Thursday, with the lines of the MACD still going further apart. So we are already way oversold and could be expecting a rebound looking at the MACD. Another interesting part is that we already had all the moving average crossovers, including the longest one in the beginning of May, where the 200-day moving average went under the 300 one. So I'm definitely not sure if we are at the bottom or not, but from what I can tell, most of the bearish signs are already in the chart. So I would carefully start looking for a rebound from these levels. So we did go through all the metrics I'm interested in, and now we can do a quick recap of what we found. In the last 5 years, revenue has been consistently increasing, with a small caveat that in the last few quarters it has been slowing down. This year's sell-off helped the price earnings to go lower, and it is now the cheapest it has been in the last 5 years. In 5 years, Rowe Price bought back 16 million shares, and we could complain that they haven't been buying more, but they actually did miss buying at the all-time highs of 2021. Now with the sell-off, the dividend yield is also moving higher, now at around 4.5%, and this means it is over its 5-year average for 53.49%. Analysts seem to be bullish. As for 2023, they are predicting that the price will be going up from 5 to 29%. Superinvestors are also only holders and buyers, with the only problem here being insiders, as in the last 6 months they have only been selling and not buying. The technicals are interesting. Both relative strength index and the MACD are currently oversold, and looking into the moving averages, they all have already crossed lower, with the 200-day moving under 300 a month back in the beginning of May. So that was it for today. Make sure to support the channel and leave a thumbs up under the video. What do you think, is Rowe Price a worthy pick right now? Share your stance on it in a comment below. If you would be interested in getting access to my dividend investing watchlist, then consider memberships. By becoming a member you will get access to Discord, where I share all my documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Previously I also looked into other companies, so if you would be interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.